Hello, traders, and welcome back to another episode of the Trading Room. My name is Fred Makpota, and I'm one of the founders of the Busy Traders Network. So I do hope you had a fantastic start of the week. It is Tuesday, the 27th of June, 2023. The month of June is almost over. That means the third quarter of the year, the second quarter of the year is over as well, and we are about to start the third quarter of the year. So I do hope we all start that quarter very well. And before I get into the breakdown and everything, as always, we need to look at the economic calendar so that we can get familiar on the high impact news that are coming out throughout that particular week. So I do hope everyone is well. So grab a notebook, grab a pen, and I hope let's get straight into the market breakdown. So starting out with the breakdown today. We didn't have a live session yesterday because of a network problem. I just realized that it was a problem that had to do with my computer, so I had to update it, and now I think everything is going well. So I decided to jump on today and do a market brief through the trading room. So starting out today, we have building permits for the USD. We also have core durable goods orders for the month of May. We also have CD consumer confidence for the dollar and new home sales for the dollar. So a big day for the dollar for today. We need to look out for that throughout the whole day. So that's the only thing that's coming out throughout the day today. So into the breakdown, starting out with my DXY as always. So from the previous market breakdown we did, which was I think was on Friday, if I'm not mistaken. So looking at the DXY at the moment, we did respect that price action, which I was breaking down the previous week, where we created a simple double bottom here, picked up some liquidity on that internal liquidity region. Price did manage to push to the outside, and yesterday we started to see some rebound back to the downside on the dollar, causing some sell-off against the dollar-related pairs. So as you can see right now, it's not going to be a surprise if the price starts to push all the way down and maybe breaking this internal liquidity and completing that and going all the way down to this external liquidity region, which is around 100.8 to 100.79, around those regions. It won't be a surprise at all if price comes back down, fills up this external liquidity before it actually starts to reverse to the upside. So that's on the DXY. I'm expecting some further sell-offs. Since we created that impulse down, this can be a minor correction for that bigger impulse to the downside, completing this liquidity move. So it won't be a surprise at all if that move actually happens, and that will cause a massive trade across the related pairs. Starting out with the gold. So gold did respect our analysis and still selling off to the downside, as you can see. Prices still pushing and creating that impulse and corrections. And as you can see from the previous 3 days, prices has been very choppy around 1935 and 1925. So between those two regions, price has been bouncing off and ranging for some time now. So looking on the 4-hour time frame, as you can see, price did manage to push to the downside, and now price did come back and retest this liquidity region as here. As you can see, then a nice spike which pushed price to the downside. But as we started the last day on Monday, when we started Monday, price did start to range in between this region. As you can still see, price is creating those lower highs. So it won't be a surprise at all if this pushes to the downside, creating those lower lows as well. And this is a great chance because it comes back down and fills this whole liquidity region or around to 1813. That's a long-term trade. So we have these internal liquidity regions, or some people can call them support areas. We do have these areas in between, so these can be acting as our minor targets as we continue pushing to the downside. So looking at the 1-hour time frame, since we already understand that we are looking for potential sells on gold, I wouldn't jump in on a sell right now because this can easily push back to the outside, maybe pick up some liquidity again, then after that sell-off. So it won't be a surprise if that happens. But also you need to understand, if I just take this out, you need to understand that price on gold can also rebound back to the upside, right? It can go back to the upside. If I just take out these lines for a minute, looking at the structure play, this won't be a surprise since we are forming something like a triangle. These have tendencies of either breaking to the upside or to the downside, so it won't be a surprise if this something like this happens. Price trickles its way, then falls down. Also, it can happen that it can trickle its way and push to the outside, so it won't be a surprise if something like that does happen, because this has a tendency of breaking, coming back and retesting, then pushing to the outside. So it won't be a surprise if that happens, because we can then come back and fill this liquidity gap here and then look for a sell-off from there. Price can create a move like that, so it won't be a surprise at all if that happens, because looking at this structure right here, this can easily just push to the outside, create like a double top before it actually drops. So that's gold. And since the DXY is actually pushing to the downside, that means there is kind of a dollar weakness. But the dollar weakness on the DXY usually doesn't affect much on the gold. So it doesn't affect gold so much. So it won't be a surprise if that doesn't happen. At least if that doesn't happen, then like it doesn't follow what the DXY is actually doing. So this can just easily push and drop. So it won't be a surprise, because gold is driven by many factors. Of course, it's highly backed up with the dollar and looking at the DXY, but there are many factors that usually affect the gold prices. There are factors of politics, there are factors of war, factors of calamities, natural calamities, and so on and so forth. Another pair that I'll be looking at is euro dollar for that inverse correlation with the DXY. So as you can see from the daily time frame, price did manage to push to the upside, came back down. Then we took a buy trade. I remember I sent out a signal on the free channel as well. Price did manage to push to the upside and reverse exactly at 1.101. That was the level that I called, and price did manage to reject off from there. Then price did manage to spike even slightly below this external liquidity, and now we can adjust this and call that this is our new liquidity region. As you can see, there are multiple spikes being thrown around this area, so it's around 1.0840 to 1.0845, something like that. So around that area, we can call it our new external liquidity region, where price did manage to pick up some liquidity before it started to push back to the upside. Looking at the 4-hour time frame, as you can see, we did form like a half engulfing candle, which was a no-brainer. Now price was pushing back to the outside as well. Looking at the 1-hour time frame, I do expect price to come back into 1.101. I do expect something like that to happen. So as you can see here, price is creating that impulse, correction. We saw that impulse, and now we can look for a buy trade from here. Since the DXY is still selling off, we can look for a buy trade and stop loss just slightly below, like 15 pips, like that, because the risk reward ratio is kind of messed up on this one. We have an 80 pip target and a stop loss of, like, we can say 15 pips. 15 pips, so giving you a risk reward ratio of almost 5% risk reward ratio. So a nice entry from there would give us a push to the outside on euro dollar. So that's my setup on euro USD. GJ, so as you can see, GJ is still forming that expanding flag formation. It didn't respect my analysis, which I sent out on Friday, and now price is continuing to push to the outside. I am kind of looking for a continuation pattern for me to take a trade, but then I wouldn't jump on right now, because it's so easy for this to like reverse back down before it actually continues, because as you can see, it's forming something like a trend line structure, right? Like an ascending. If I just, because this expanding flag has already been invalidated. So it's forming something like a rising wedge type of formation, or we can call it like a rising wedge, because it is like a rising wedge because it's being squeezed at on its end, and usually patterns like this usually come and sell off massively. So I won't be surprised if this sells off before it actually continues to the upside. But then it won't be a surprise that, oh, if this just manages to break, then sells off. So as you can see right now, we're creating the first touch, second touch. So at the moment, the best setup would be, the setup that I'm looking out for is a probable sell-off back to these lows. So a nice entry from, you have this structure right here. So if I just remove this, let me use the arrows. Let me use the arrows instead. Where is it? Where are the arrows on? Second touch, and now the third touch, top right there. So looking for that first touch, second touch, third touch. So a nice sell-off from the top of the structure right here. That will be around 183, maybe 183.20. Then taking a sell to these lows, to a minimum of these lows, gives you around like 300 pips. My stop loss will just go slightly above like 40, let's say 30 pips for an even, because it's a risk entry trade. So a nice sell off from there on top of the structure, like 1, 2, 3 sell off to the downside, gives you like around 300 pips, and then looking for a potential reversal to the outside. I'm sorry, the camera is it's kind of dark in my house, so don't bother looking at how I'm talking. So a nice setup on GJ like that, but then it won't be a surprise if this this setup will be invalidated. I would invalidate this setup if price manages to break, comes back, retests the structure, then continues. It won't be a surprise if that happens. Another reason whereby we could actually say like it's not going to play out is if price pushes down like this and then continues, find support around there, because it will then create like first touch, second touch, and the third touch on the bottom of the structure before it actually breaks to the outside. But that's highly unlikely to happen. I am more favored on looking for this sell trade from the top of the structure to a minimum of this area here. To a minimum around this area gives you like around 80 pips, so it's still a nice trade. But then this can go all the way down, complete that 90% for almost like 300 pips to the downside before it actually reverses and breaks to the upside. That will be a much better trade and a much better setup. So I'm just forecasting different scenarios and different actions that the market can create before it actually plays out. Another trade setup that I'm looking out for is Euro Yen. Euro Yen started from the daily. Euro Yen is still pretty much bullish as well. I've been trading it since January, since way back in January, March. I've been trading Euro Yen, and price has, I did set up many alerts at that time I was trading it. As you can see, price did manage to bounce from this level, and now it's pushing to the upside. So if we zoom out, similar to GJ, if you go back and refer from the previous market breakdowns, similar to GJ, we are looking at this to complete a push into 169.50. So that's like almost like 1,000 pips, I think. So there is still pretty much a very huge room for us to cover. So looking from the daily time frame, we are still looking for potential continuations. And as you can see on the daily, it's forming flags and continuations. Impulse, correction, impulse. We did have a correction there, and now price is creating that next potential leg to the outside, an impulsive leg to the outside. Looking on the lower time frames now for potential entries, Similar to GJ, I do expect a little pushback down before it actually goes or continues. But the difference between Euro Yen and GJ is that Euro Yen is forming a slightly triangular pattern, which is like more of a continuation pattern rather than a potential sell-off before it actually buys off. You see, it's forming something like a triangular pattern. A nice trade would be a slight push back down, creating that first touch, second touch, and the third touch on the bottom. And I would look for a buy trade from here, and hold it all the way. But you need to have like a slightly bigger stop loss, because this can easily it can happen that the market can break back down at a minimum to this level and then break to the upside, because then price would have created a flag pattern, which is a continuation pattern, right? So it can come back down, create like a flag, create like a much bigger flag instead of this triangular pattern, but then this can easily just break from there. So a nice trade would be from around 156.40 to 156.50, around that level, and look for a buy trade to the upside. So that's GJ, keeping it very, very simple there. Sorry, that's Euro Yen. So GJ and Euro Yen are those my top trade setups at the moment. My top trade setups. So a buy trade from 156.5, then looking to go all the way to the outside. That's, as you can see, it's almost like 1,300 pips. So it's a long way to go. It's a long-term trade. It's a very long-term trade. And for those who took the Market FX course before, I did explain on how you can trade these long-term trades, how to manage them, the management, the style, the setup, and how you can capitalize on these kind of moves. So it's a very big and massive trade to be on the lookout for, and let's see how it plays out. So finishing this up with VIX 75. VIX 75. I've been trading VIX 75 I was trading it during the weekend, and it did make me some money. I did lose some money out of it as well. It has been choppy all around. VIX 75 has been choppy. Looking from the daily time frame, as you can see, price has been kind of choppy, and it has been ranging in between 400k and 370,000. And as you can see, price has just been choppy all around. I was expecting price to actually push back down into 330,000 regions, but then price didn't respect that, and it's just been ranging for the past few days and even invalidated my trade setup. We were looking at this as a potential head and shoulder structure, but then price did manage to like slightly break above, invalidating that structure and forming a much bigger structure or a different structure, which is more likely more like ascending type of formation, right? So it has been forming this, ranging in between these lows and these highs. Yesterday I did manage to take a sell trade from around 380k. Price did push all the way down to 370,000, and that's where it found support 1, 2, 3. Then price started to spike to the upside. So now I am expecting price to continue pushing to the upside, and if I just extend this, I am expecting price to continue pushing to the outside, then forming like a first touch, second touch, third touch, and then we can look for a sell from the top of the structure, and probably this will be the trade that goes all the way down, right? But then it's not a must for the market to actually do that and respect that, because if I just remove these drawings, if I extend this, then we have something like we have a different structure right here, right? So it won't be a surprise if this trickles its way like up, then breaks all the way to a much higher price point, right? And which is also this liquidity region around here, which also falls around this liquidity region. right? Breaking above it, catching people on the wrong side before it actually sells off again. So long term, VIX 75 is a buy trade. Short term, we can look for these short term sells. But then long term, I am kind of looking at this as a buy trade because we created this double bottom structure, then price started to push to the upside. So long term, we are looking for price to go all the way to 456,000. So it's a long way to go, and it can take a while to play out, but then it doesn't matter how long it takes. What matters is what we do during the day, because the difference between VIX 75 and the Forex pairs is that VIX 75 is open 24/7. Like, it's open 24/7, 24 hours a day, 7 days a week. So it's open every time. It's always open. So the movements might take longer, or it might seem they're taking longer because, like, it's being traded every single day. But the difference between it and the Forex market is that the Forex market is open 5 days a week. So during those 5 days, you can get different moves. But then on VIX 75, the same move can happen multiple times. So this is why it ranges longer, it trends longer, and it takes longer to actually play out for trades to play out. So it's always a matter of understanding how VIX 75 works, and you can then adapt it on your trading style. So without further ado, I don't have a trade setup at the moment because price is still ranging. My trade setup would be a nice pushback into 380,000 before we actually take a buy trade. But then looking at it right now, I don't see any potential for that. So looking at the 15-minute time frame for a potential buy trade, I would look for a buy trade for a minimum. Price is pushing to the outside slowly, trickling its way to the outside. I can look for a buy trade from there, and at a minimum to this target here at this high. Stop loss just slightly below there. So an entry from 380, my stop loss will be at 386. My stop loss will be slightly at 382, maybe, just being conservative. And then we can look for a buy trade to a minimum at 397. And if this is the one that goes, then all the way to 429. So that will be a long-term trade, and I don't want to miss on that. So I'll be on the lookout for that. And if the trade does manage to show up, I will send out a signal and give you a chance for you to also capitalize on this trade. Without further ado, thank you very much for tuning in. Hope you enjoyed this one. I wish you all a happy trading day and a trading week as well. For any questions, any suggestions, be sure to leave a comment, like, subscribe, and also remember to subscribe to our channel on the Telegram channel, where we give out massive tons of value and massive tons of trade setups. So cheers, I'll catch you on the next one. Bye bye. My name is Mark Porter, and this is the Busy Traders.